Thursday, February 1st, 2018, Monaco 64, home of alternative economics and contrarian views. So it's around 9:45 a.m. London. I want to look at the markets this morning as usual. I want to look at silver in particular and what we saw yesterday in terms of price action. And I want to talk briefly about how socialism disrupts the free market and how it doesn't work. And particularly as related to the UK where I live. First of all, let's have a look at what we're doing. Spot gold yesterday traded a bit up and down, and it finished quite strongly even after the Fed decision and the comments that came and the announcement. We're now 13.41. We're down about $4. The range has been 13.47 to 13.38. So it's been frustrating the last week or so in gold. It just feels like there's a force there trying to keep it down. Silver yesterday, as I said, did quite well. And I'll come to that later. Right now, silver 1727.50, down 6 cents. The range has been 1720 to 1741. So yeah, precious metals down a little bit. The Dow up 5 points, 26,161. It had been up over 80 points overnight, so we have come off here. S&P up 6 points, doing a little better. NASDAQ up 7. In terms of currencies, we're seeing the pound do well this morning. The pound is up 60 pips, at 142.50, up 0.4%. The euro is up 28 at 124.40. And the dollar, though, is up against the yen. So that's what's keeping gold down at the moment. These manipulators, these central bankers and the bullion banks, they've got so many shenanigans that they play to manipulate these currencies. It's just amazing. So yeah, the dollar is stronger against the yen, up 40 pips at 109.60, up 0.2%. The bond market this morning, seeing some interesting moves in the bond market. Yesterday, we spiked to 275, which is a target, which is a level I talked about. The fact that it's, the markets look at numbers like round numbers and quarters, halves, and 3/4. So this morning, we're at 273. So yesterday, after the Fed announcement and the statement, we spiked to 275, and it came right back down. And this morning, we've gone back up. We have been up to 275 basically again, and now it's at 273. So the bond market remains under pressure, and that's why yields go up. As I've said before, bond yields are inversely related to bond prices. As bond prices drop, the yields go up, and the cost of financing loans go up, especially for Uncle Sam, who's got so much debt. Dollar index as a whole this morning, then, we're down 0.1% at 88.98. That's the dollar index. I guess the yen is cushioning the dollar this morning. What else? Crude oil up almost 1% at 65.20. So it keeps creeping up, crude oil. So now to silver. Well, silver yesterday had a really good day relative to gold. Even though gold went up, silver went up even more. And I wrote something on Steemit, a little article about the technicals, about the gold-silver ratio, and I'll put the link to it below in the description. And this is what I said in the article. And I said, in every significant precious metals bull market since the 1970s, the white metal or silver has led the way. The gold-to-silver ratio has always been a good barometer for the direction of the precious metals. The ratio translates into how many troy ounces of silver are needed to buy 1 troy ounce of gold. Historically, going back centuries, the ratio usually averaged around 16 to 1. But in the 20th century, the with the creation of the Federal Reserve System and the emergence of fiat money and the abandonment of sound money, this ratio has been a lot higher, an average 47-1, according to golddealer.com. And I just went on to look at the the bull market in precious metals in the late 70s, early 1980, and the bull market from the low in '08 after the Lehman crisis to 2011, and how gold outperformed and how this ratio, gold to silver ratio, dropped a lot. And I also looked at a chart of silver right now and how it looks like it's breaking out from a falling pennant that we've had for basically the last 2 years in the silver price. And the other thing I said is that the gold to silver ratio, which is around 77 right now, or 77.5 or thereabouts, needs to really break 76 and then 74.5. And we need to see a big move lower in that ratio, i.e. we need to see silver starting to outperform gold for gold to really motor higher and basically break this lid we've had since, I don't know, 2013, 2014, when gold dropped quite precipitously. I think it was April 2013. We've had this lid basically below 1400. We've had a base, around 1100, 1200. So it's kind of forming inverse head and shoulder. And if we can break out of 1375, I think gold could be up quite significantly. The first target, of course, here is 1357, which we broke recently, but then the usual suspects came in the market and they've kept gold below that level. As for the other currencies, I think gold will also do well in other currencies. I think people should not be concerned that the pound, the Canadian dollar are actually not doing much against gold. You need to stay the course. So I said I was going to talk about socialism and how it fails. Well, here in the UK, there's a lot of talk about housing and the housing crisis. The government's always getting involved, trying to alleviate the housing crisis, build more homes, help first-time buyers, and things never improve. And my wife had the radio on this morning, LBC, and they're talking about a new plan by the government to improve housing. And I said, they never look at the real reason behind this. And the reason why housing prices are unaffordable, or housing is unaffordable for the average person, is because 2/3 of the balance sheets of the banks or the financial system in the UK is backed by housing loans. So everyone's mortgages and liabilities are the bank's assets. And if they let the housing market correct how it should have done, and it did briefly in 07 to 09, but then they, threw everything at it. They didn't let it correct. So we've gone right back up to keep the banks afloat, because if the free market is allowed to do its job and allocate resources properly, the housing market has to correct down. Prices are too high. That's what a market does when prices are too high and no one can buy it. Usually it corrects down so people can afford it, and then you find like an equilibrium. But in the UK and many other countries, the government doesn't allow that. Through their central banks, they keep pumping up this housing market because it's the only game in town. The Western economies, a lot of them have been hollowed out. There's no more manufacturing. There's no more mining. There's no jobs that create wealth. The only thing that they can keep that is somewhat valuable is bricks and mortars. So until they allow a free market in money, i.e. in banking, you know, where interest rates are not manipulated lower and lenders and the Bank of England can't keep these loans at high prices, you know, the bonds that back these loans, we'll never see a, you know, an alleviation of this problem. And people keep looking at the consequences of this manipulation, and they trying to fix the wrong thing. They have to look at the symptoms. But of course, they're not going to do that because the government also needs cheap funding because it's the biggest debtor in the country, the UK government. The other thing is the NHS. Don't get me wrong, you get good treatment in the NHS, but every winter there's a NHS crisis. There's not enough funding. There's not enough people to work there, and they're not getting paid enough. So it's the other pillar of this socialist, you know, fallacy that governments can better allocate resources. And, you know, people never look into maybe the bigger picture. Maybe we should allow the free market to do things. There's nothing that says that health, money, or anything should be a right or managed by a central authority. Of course, I'm not advocating completely scrapping everything now because the public has been used to this system for more than 2 generations. So we need to do it smooth, you know, gradually. But people need to realize that governments, the best thing they do is really steal and start wars. That's the best thing governments are at. Do you really want them to manage our economic affairs and our health? I don't think so. So I know it's controversial. A lot of people are going to say, oh, but in a free market, people would be dying in the streets. Well, people are dying because of the NHS, because they're not getting the treatment. You know, they're having to wait for operations. So the same thing is happening there. People can't get their housing because, you know, the government and the banks have manipulated the price of money, and that's kept housing values up. And that's the only reason why. So that's it for now. If you enjoyed this video, please like, share it, subscribe to my YouTube channel if you haven't yet. You can also follow me on steemit.com and on Twitter. And I'll talk to you later. Bye.